Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, welcome to the August 30th edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, is produced by Paige Driscoll. We are back after a brief late summer holiday. Let's dive right in with the latest from the NDPSR. This butter number coming in at 269.30 represents a -3 to the CME 1 week average of 272.05. -3 is well below our normal basis. All the weight traded at the CME certainly contributing to that. We traded 70 loads on the CME last week, 98 loads the week prior. We have seen a bump in volume. If you'll notice, the August 19th volume week at 4.6 million, that's about 1.1 million above our expected 3.5, but certainly short of what the 98 loads would equate to. 98 loads at the CME equates to 3.9 million pounds. So all of that weight went in last week, and we had a big pushback on contracted sales, or we had that volume at the CME staggered over a few weeks. It depends on when the invoice goes out to where that weight hits the NDPSR. This week we had another bump in volume up to 5.3, so almost 2 million pounds above our expected NDPSR volume. And of course, all that weight trading at the CME, if it comes from the manufacturer, it gets reported here on this report minus the freight. And I think that's why we have this -3 basis. So 269.30 with a negative basis on higher than expected volume in butter. Moving on to cheese, this block number 199.37. That represents a +2 to the CME 1 week average of 197.05. +2 is exactly our expected basis. What's interesting though is at that level, at that 199 level, end users turn their nose up a bit. This 10.8 million pounds is well short of our expected 12.5. And if you look back at the 4 weeks that we use here to calculate the August expiration, volume in 3 out of those 4 weeks, well below the expected 12.5. Only the first week, the August 5th level, is above 100,000 pounds above that expected 12.5 million pounds. And you'll notice that prices at the CME and the NDPSR have moved higher. However, on that higher move, the end user seems to have turned their nose up a little bit, taking only the bare minimum on forward contract agreements. And with that light volume at the CME and the high price, we are seeing lower than expected volume and a lower than expected basis. Story rings true for the barrel as well, 185.03. That represents a +4, and once again, +4 is exactly kind of at the low end of our expected 4 to 6 positive basis range for the barrels. But the barrels, once again, all 4 weeks used to calculate the August expiration, coming in anywhere from 2 to 3 million pounds under our expected weight. So the processed cheese end user turning up their nose at these higher levels at the CME. As I said before in the block, when prices creep north of 170, we saw the volume tail off. Here, anything over 160, volume seems to drop anywhere from 2 to 3 million pounds a week. So for all the enthusiasm that we're seeing on the CME, the buying enthusiasm is not reflected here on the NDPSR, with volume seeming a little anemic at best. What's not anemic is the whey complex. Of course, this is a downtick from last week, this 26.58, and that represents a -1 to the uptick at the CME of 27.30. So it's a slow-moving ship here in the NDPSR whey. Prices have moved higher at the CME, and we have a little bit of a downtick. What is different in the whey complex as opposed to the cheese complex is we're seeing big volume in the whey. 7.3 million pounds at that -1. So the manufacturer had to discount a little bit, but was able to move a sizable chunk of product, called at 3 million over our expected volume level. Impressive for the whey manufacturer, to say the least. And then lastly, non-fat, 113.65. That represents a plus 1.5 to the CME 1 week average of 112. A little bit of a premium the manufacturer was able to call. However, significantly lower than expected volume at that level. Just barely north of 13 million pounds, call it 7 million pounds short of the expected 20 million. A good price in non-fat, and as seems to be the story on the majority of products, a good price with lackluster volume. So, as I said, this is the final week of the August pricing cycle. The last time we did this report was 3 weeks ago when I predicted that the ending class 3 price for August was going to be $17.23. Missed it by 4, $17.19. Not bad for 3 weeks ahead. And the final for class 4 is $18.91. If you carry current CME equivalents out through the remainder of the 5-week September pricing cycle, currently getting September class 3, $18.37, with a September class 4 of $18.57. So that class 3, class 4 spread narrows a bit for September. What's interesting is we have a little bit of a premium in the September class 3. However, that 1837 is a pretty familiar number if you look out on the class 3 futures forward curve. Most of the options for well into next year, actually all the way through next summer, hovering around that 1850, 1840 level. So it looks like futures traders are comfortable with the current price level as the futures forward curve is holding right in at that area. But if we continue to see this lackluster volume, at some point something's going to have to give. We will see what they have in store for us in the weeks to come. Until then, I'm Joe on behalf of Paige. Thanks so much. See you next week. Bye.
This episode of Basis Loaded was produced in cooperation with Everag. At Everag, we partner with every corner of the agriculture industry, from dairy to livestock, crops, and agribusiness, to deliver intelligent supply chain and risk management solutions. We are Everag, everything agriculture. Learn more at www.ever.ag/everything.